By the end of this video, you're going to have an excellent understanding about building wealth through real estate investing and why it's such a great way to build wealth. I am Mr. Maciek. Welcome to the channel. Thank you so much for coming and watching. If you have not subscribed yet, please subscribe below. I would really appreciate it. And you are missing out if you are not subscribed. So let's get into real estate investing and why it is such a great tool to build wealth. Not just wealth for you, but also generational wealth. So we're going to be talking about 8 different reasons why real estate is so good compared to other investment instruments such as stocks, bonds, or any other kind of paper assets. Okay, number 1 is that the value increases over time. If you look at the history of the value of real estate, you will notice that it actually appreciates faster than our inflation rate. So it will go up over time, and that's not to say it only goes up. No, real estate goes through cycles. It does go down, it does go up, and every time it goes down, we know it. It is very apparent, and then when it goes up, we know it. It's very apparent, and that's when you can take advantage of it, is when it goes down and then sell it when it goes up. You know, what's also interesting is that as people build more houses and housing, usually the prices don't fall. However, with stocks, if a company has a stock offering and they're offering more stocks for sale to an institutional investor, for example, then the value of all of their stocks goes down just slightly because now there's more of them in circulation, and that's not the case in real estate. Same with cash, with fiat money. So when they're printing more cash and giving it to us as a stimulus, there is more cash out there and the value of that cash actually goes down slightly. Once again, not the case in real estate. Just because we build more housing does not mean that the value is actually going to go down. Okay, number 2 is that demand is always there. So demand actually keeps increasing for real estate. And the reason is because the population keeps increasing. On the whole world, the population is going up, up, and up. And what that's doing is that there is a housing shortage in some areas that will obviously create more demand, less supply, prices go up. And overall, in the long run, that is always happening. The demand is always increasing faster than the supply is able to provide because the population is increasing so fast. So in other words, appreciation happens. It just goes up in value, back to point number 1. And point number 3 is about the value add of real estate. If you are smart and you find the right deal, you can actually add more value to it. It might be something as easy as putting some paint on a property, or maybe changing some landscape, or maybe as technical as adding a whole second floor to it, or a pool, or some big capital investment. However, you have a lot of opportunities to add value in real estate. Now, as a real estate investor myself, I know that in multifamily, this is one of the biggest reasons why people buy multifamily, is that they see an opportunity of value add. As an example, I actually took a triplex and I sub-metered it. I put 3 different electric meters on there, and now every tenant can pay their own electric. And now I don't have to bear the expense of all of the people wasting electricity because they did not have to pay it. So once I'd made that capital improvement, I increased my bottom line. I spent money, $8,000, to sub-meter it, and now they're all paying for everything, and I have made that money over and over itself just on that little change. And other things you can do is, in a multifamily situation, you can dedicate parking spots and maybe give 1 per unit or 2 per unit, and then any extras you can sell as additional income. Maybe $50 a month for an extra parking spot. But it's not just in multifamily, you can do this in single family homes as well. You can add so much value into a property. You just have to find the right one, have a right vision, and execute on it. That is the whole reason why the whole flipping industry is out there. The wholesaling is industry, because they are the precursor to the flippers. They find the deals that have a lot of value add to it. Okay, number 4, and this one is gigantic as a benefit, are all the tax incentives. Now, I am not an accountant, I am not a tax preparer or anything like that. I use an accountant. I've never filed my own taxes. I always have had a professional do it for me. But I do know quite a bit about it, and this is not professional legal advice on tax preparedness, but there are so many different tax advantages to owning real estate. Owning rental properties, investment real estate, you are able to deduct your mortgage interest, your depreciation, which, by the way, In a way, it makes no sense. Your value actually appreciates, but from a tax perspective, the buildings itself actually depreciates. And that's true, right? Things won't last forever. So you get to write off a lot of your depreciation. And then you have costs of repairs, your taxes, your insurance, your management fees. I mean, the list goes on. There is a giant list out there that I'm sure you can find about all the different things you can write off on your investment property. And then at the end of the day, what does that mean? Is that you get to keep more of the money that you made in your pocket. No other investment instrument has as many tax advantages as real estate. Stocks don't, gold and silver don't. I mean, I don't know how you invest, but real estate has so many advantages. Hey, if you are liking this video, please click the like button. It only takes a second, and I swear if you just click that like button, you are going to be blessed with new real estate deals coming into your world. Try it out, test it, challenge it. Click the like button, please. So number 5 benefit of owning real estate is the passive income. It's the cash flow. I'm sure you've heard all about this if you are interested in real estate, because that is one of the biggest benefits that people have, is that you actually can buy something and then it pays you every month. That's called the cash flow. Now sure, you have some expenses, so you minus, and then you get to keep some money in your pocket. All the while, the loan that you got for this property is being paid down by somebody else. Isn't that wonderful? Cash flow is probably most real estate investors' favorite part of investing. However, I will tell you that in my experience, I have made more money on the appreciation of the asset than I have on the monthly cash flow. When I add up the whole time I owned a property, it usually goes up in value a lot more than all the money that I made month after month, year after year. Either way, you make money here, you make money there, and with taxes, you write a lot of stuff off. It's a great investment instrument. And now number 6 is about leveraging your money. You are able to purchase $200,000 worth of assets with just 5% down, with just $10,000. Or if it's an investment, then 15% down, so $30,000. You have leverage, and that's what really is a giant benefit, because even stocks you can leverage, but you can only leverage 2 to 1 for the most part. Meaning if you have a margin account, you can put $10,000 into it and you can buy up to $20,000 worth of stock, and there's a whole bunch of rules to that. But with real estate, you can leverage a lot more than that. So if you have just a small little bit amount of money to get started, don't worry, you can still get in and buy real estate. And real estate will be expensive. And when it goes up in value of 5-10%, it's going up not on the money that you put into it, but by the big dollar amount that it's actually worth. Also, funding is so easy and simple and cheap. Right now, we are approximately 3.0% interest rates. We are in February 2021, and it's just unbelievable because you can't get 3% interest rates on almost any kind of loan out there. Not only is it easy to qualify, but also it's almost free. I mean, if you have cash anywhere, don't pay down your mortgage loan. Go and invest somewhere else, because you're just making 3% on your money. It is such a good deal, and it's very easy to get. And now number 7 is about the cash out refinances. Oh my gosh, what other instrument of investment allows you to do this? So you can go buy a piece of property, maybe something that needs a little bit of lipstick on the pigs, some starter home out there, 2-bedroom, 2-bath for $150,000. And then you go and you paint it and you add a little bit of landscaping and you pretty it up and you increase the value because you got a good deal and then you made it nicer, and you can go and refinance that. Now it might be worth $200,000 by then, and you can refinance and pull cash out, get all your money that you put into it back, allocate a new loan to it, and then have a tenant pay down your loan. And then once you have your initial money back in your pocket, you can go and do that again and again and again and again. It is unbelievable. This is actually called the BRRRR. You buy, you repair, you rent it, you refinance it. It's a very simple strategy, and it's great because if you are sitting on maybe $250,000 and you're not sure where to invest it, what I would do is the following. I would go and buy something for about $150,000 or less. I would go and repair it. Then I would go and refinance it. I would rent it out. I would repeat the process. And I would do that until I have maxed out all of the credit lines that are available to me, which pretty much, if you do the numbers right, it will never stop. You can do that for 5,000 houses if you want. You do have to find lenders that are willing to work with you after you have a certain dollar amount, but it won't be hard to find once you prove that you have a formula that actually works. Banks love successful businessmen. Okay, and number 8 is about our 1031 exchanges. Some people call this the loophole in the IRS, but it's no loophole. It was designed this way. It is so simple. And once again, check with a professional tax accountant about this. But here's basically how it works. You can buy a piece of property and hold it for years and years and years. And then you sell it and you've made a lot of money. But before you sell it, you set yourself up to be in a 1031 exchange. So let's just say you profit on this investment. You've held it for 10 years and you've profited $250,000. And instead of paying long-term capital gains taxes on that, which is about 15%, you can take the whole amount, the whole $250,000, and dump it into new real estate investment. It could be 1, 2, 3 different investments. It doesn't matter. There are a lot of rules to this, but it's such a great investment instrument because you get to reinvest all of the money that you had, not just the after-tax money that you have. So you take that whole $250, you put it into another investment, and you let that go. And that's going to go and run and make money, and eventually you're going to sell your property. And then once you sell your property, you can do a 1031 exchange again. And the best part about 1031 exchanges is that when you die, your heirs pay 0 taxes on all the profit that you've made over the years. I do know somebody who owns a condo on the beach. This person has been doing 1031 exchanges for over 40 years. And at this point in time, there's no reason to sell. They're going to owe so much taxes on this one property that it's better to just keep it and let it make him money, so that when he passes away and his wife passes away, that's going to be gifted down as part of an estate, and the new heir will not have to pay any taxes on it. Now, there might be some small little taxes, but not the big tax obligation. The basis resets. Once again, this is not any financial advice. This is not any kind of tax advice. Go consult with your people. I am just a YouTuber who loves investing in real estate. So what the heck are you waiting for? Right now, go click this video and watch how you can get into real estate investing with very little money. Thanks so much for watching. Please subscribe if you have not yet.